Good afternoon, traders. This is Christian Freibert's Tribeca Trade Group, and this is your end of day market recap for Friday, June 23rd. And risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. So as always on Fridays, what I do is just give some themes that we saw for today, this week, and then we'll also go through the performance for the week. You can see any standout areas, or in this week, a lot of more red areas than green areas, but we'll kind of talk about that in terms of the technicals and what they're showing too in terms of this down week. So themes of the day, first of all, I would say, well, today was the Russell rebalance. So when people hear Russell rebalance, well, number one, it's an annual rebalance, so it only happens once a year and one day, and it's basically over. And there were some interesting moves, I think, at the end of the day. But what I was going to say is when people hear Russell rebalance, they think, oh, that's the small cap index, right? That's the IWM. Well, it's actually a lot more than that. There's a lot of money, and there's a lot more index ETFs that are Russell related. For example, IWD, D as in dog, that is the large cap value ETF, and IWF as in Frank is the large cap growth. So there's a lot of assets that are tracking. And so it's not just the small cap ETFs, and those are the IWM, IWN as in Nancy, which is small cap growth, and IWO large cap growth. So regardless, that's all done for the day. Today kind of felt a little bit like last Friday. Remember, last Friday was quadruple witching. I didn't see as many volatile moves as what I kind of saw in some names at the close today, versus last week. Last week was kind of just very subdued, but the overall like price action of being choppy was kind of a bit similar. So that's done, that's over with. But overall, like this week, what I thought was interesting and I don't think got much attention was just global weakness. I talked a little bit about that on Twitter this morning, but so for example, if you look at some of these, this is the Euro stocks, for example, it was down every day. They did not have a holiday this week. They were open every day this week. They were down I think 2.7% in red every day this week, right? So so some big down performance for most of global indices. So that's Euro stocks, and China was much worse. China, I think, was down close to 5% or somewhere in that. I'm sorry, I don't have it in front of me, but we'll go over the week performance in the international ETFs too. But so we excuse me, we saw a down week for the U.S. indices, but much worse in some of the international areas. So, like I said, I'll go over that. But just I think interesting because not really getting that much attention. Another one that I have for the theme for today, but also this week, breadth really declined this week. And we do look at something, what I tend to look at for breadth, I look at the advanced decline lines, and I also look at the McClellan Summation Index. You haven't really heard me talk about this too much since we had this bullish crossover back in the beginning of June, but you could see, and this hasn't been updated for today. And so I would assume this red line that you see here at the end is going to come closer to this 10-day moving average today, just indicating that breadth has not been particularly good. There's been a lot more decliners versus advancers this week. But the trend, and this is what it is for the NASDAQ. The previous screenshot was for the NYSE. This is NASDAQ McClellan Summation Index. That also moving rapidly lower. And again, this has not been updated for today. So you're going to see very close to a crossover, a bearish crossover with the 10-day moving average. Give it one more day and you might very well see that for next week. So that kind of leads us to, what are we seeing in terms of the indices? Obviously yesterday, let me just X out of this, and we'll get into this. Obviously, yesterday was an up day, but no follow through. And even so one of the things that I always try to point out to traders is that, of course, one day is not a trend. And even though the Qs had a nice bullish engulfing candle yesterday, there is no follow through from that. So let me bring up SPY, or Yeah, let's bring up SPY on the daily chart. Right now, you're looking at the weekly chart, which I'll come back to because I think it's important to look at what the big picture is telling us. But yeah, I mean, we've had a lot of digestion, and rewind to where we were about a week ago. You heard me talk about, how we were overbought and the RSI, which is down here on the study down here, was sitting in overbought territory for a few days. So that's now been burned off. We also hit that overhead supply. That's the red line, Virgin point of control. You could read more about Virgin point of controls on my pinned tweet on Twitter, which will tell you all about the market webs and volume at price and so forth. But that was a big overhead supply area, and we touched that on last Thursday's rally. And since then, besides the move yesterday, it's been kind of a move lower. So a couple things to watch here, right? And again, the events next week, yeah, we'll have some things to kind of watch out for, right? We'll have, in terms of economics, we'll have the PCE deflator. So that's another gauge of inflation. We get that on 6:30. We get consumer confidence. We get durable goods. We'll hear from more Fed speakers. We'll get personal consumption. So there'll be some things to watch out for economics. Also, it will be end of month, right? So if we look at the calendar, we only have one more week of June, and then we're done with June. But I wouldn't be surprised, and I have heard about portfolio rebalancing, that they might be rebalancing a bit more into bonds and a little bit out of stocks. So that may weigh on stocks. So, it's important to kind of think about, okay, the events next week, and then, that's just 1 week away. You can also begin to kind of put your eyes towards, July, right? Because usually what tends to happen is new money is put to work in the beginning of the month. Now, so again, you might see some whipsaw moves next week, towards the end of next week with that portfolio rebalancing, because it will be the end of half the year. So that's a quarter end to the end of the second quarter. So you might see some of those dynamics play out next week. I think that will be important. Bottom line, though, where if you're a trader like myself, you've kind of learned to watch the technicals and say, okay, this is where I want to be long versus this is where I want to be reducing risk and so forth. And right now, what we have, when you look at the S&P chart on the daily, is we have a move off of, of those overbought levels that I discussed. We lost the 5-period moving average, which is very important for me because that kind of tells you if we're trending in the short term, either up or down. Again, short term, right? Because it's 5-period moving average. So we've lost that, right? So we've lost that upside momentum. That's what that means. Number two, we're kind of coming into the 20-day moving average, which will be an interesting test, right? So if we lose that, then I think, overall, for swing trades and short-term trades, reducing risk for me is advised, right? Again, I can't tell anybody else what to do, but for my trading, I really reduce my risk once we see a break of the 20-day moving average, especially in a nice uptrend like this. And then we'll kind of watch to see when buyers are going to kind of come in. But the other possibility is that buyers do support this 20-day moving average as well. All right. So again, that remains to be seen, and we don't have those answers yet, right? That's a lot of times how trading works is, if you've been doing this for a while, newer traders, they always think that somebody knows and somebody is going to, give them some insight about what the future holds. I, for one, don't. And I know that as a trader, we don't know what the future brings. We do know when some things like, as I mentioned, not quarterly rebalancing, but end of quarter can bring some volatility, right? We know those types of things that happen. We just don't know how much. And we have our rules as traders. And one of my rules is if we get back above the 5-period moving average, I'm going to be adding risk, right? If we start to, continue to trend. But for now, all of this is quite normal, right? To see some digestion after a big move of what we've seen so far. The weekly chart too, I mentioned I would come back to this weekly chart. Here we go. And really the big level to watch here, notice what we've done so far this year. And again, we're going to do a webinar for TTG members talking about some more bigger concepts and digging into what we've seen so far this year and sectors and so on and so forth. But for now, we've made this move out of the value area for the year, which is significant. Now we've broken out. Now we'll see if we can hold the breakout, right? And that level's 430.43. So, if that breaks, then, we reduce risk. And I will even do that in my longer term geared portfolio. But for now, it's just an inside week, right? And the way that an inside week or an inside bar works is that there's really no change in trend. You're just filling in some of that price action from before. And inside weeks mean there's nothing new that's really happened in terms of change of trend. I kind of repeated myself there, but it's a little bit hard to explain inside weeks, but that's the best that's the best way I can do that, is that there's no real change in the overall picture. All right. So where things would change again would be if we break this 430.43. All right. So again, this is what, to me, trading is all about: having some levels and then making adjustments based on those levels and what happens there. All right. Cues, which I will go over as well. And this time we'll start with the weekly chart, but you also have an inside bar, right? So there's nothing really to be determined, other than, this is digestion after getting really overbought. You could see even majorly overbought on the weekly chart. Could this spill over into more weakness? Of course it could. So that's why we have to kind of pay attention and make adjustments if we do see that. And then similar to the S&P, we did lose the 5-period moving average. That's the line that I've got drawn here. It's actually the exponential moving average on my charts. And we're not quite down to the 20-day moving average. So this is kind of in no man's land, below the 5-period and above the 20, but we're not down into the 20-day moving average yet. And this would be, even to me, would be a logical place for price action to go and to possibly see a bounce. So my thought there is, like, for me, is to kind of sit tight, be patient, all right, and understand that, moves up and moves down, do happen in the market. And our goal, I'm going to get to IWM too in just a second, but you've heard me talk about IWM now for a while. I've said just about in every one of these end of day videos is that I really don't like the small caps here. Even though they had this nice bounce a couple of weeks ago, nothing has really changed in the overall picture. Still is a very difficult group, and that's why I don't really trade too much IWM, because it's just too sideways, right? And you can see right in the middle of the value area for the year, much different looking than the other two indices that I just discussed. Also losing the 5-day moving average, the 20-day moving average. And coming into the flat 200-day moving average. Again, usually flat 200-day moving averages indicate sideways and trendless. That's kind of what we have going on here with the small caps. Again, they are overweighted, without getting into the conversation about the financials, but they are kind of leading lower. You could see, as I mentioned in yesterday's video, to watch this 40.54 level, we have now breached that value area. So it does not look very healthy for the banks, and in particular, the small cap banks. All right. I remain underweight that group. I don't have any exposure to the banks, haven't for a while, of anything of significance. So, this will be interesting to watch. All right, for next week. All right, so I mentioned a couple of concepts, right, about making decisions based on the technicals and so forth. One of the key concepts too that we go over, and I've been kind of hammering home all week long, as the market kind of has been trending down for this week, just moving. I don't want to say trending, because I've already talked enough about trends, but moving lower this week, is just to kind of protect your capital a bit, right? That's how really good traders separate themselves, right? I probably have said this about 5 times this week. The fact that decent traders and even average traders can make money when the market goes up. When the market goes down is really where you separate the average trader from the good trader, right? So meaning not giving back those gains once the market comes in. So we could begin to kind of look at the weekly performance, right, which is right here. I put this together at the end of every week, but the SPY was down. I mean, not a huge week for SPY to the downside, just down about 1%. Same thing with the diamonds. Keep in mind, by the way, that this is 5 days. So it's covering last Friday, because reminder that we were off on Monday. I just can't get the data from Bloomberg easily. I always use 5 days back. So if you want to see what the SPY was for this week, I could do that really quick for you. Right, and if we just put in 616, I can give you, because I kind of want to see too what it was. Yeah, it's down 1 point. I thought it would be down a little bit more, down 1.4% for the 4 days of this trading week. IWM was down 3%, and the Qs gave back. They were down 2.5%, so they gave back further performance. You heard me talk about international, and you could see IFA, which is international developed markets, was down 2.5%. Keep in mind, there's currency effects in there. Also, the emerging markets ETF was down 3.6% for the weekend. Bonds rallied 1.3%. Gold was down 1.4% for the week, and both value and growth were down this week, with value down more. Sectors, interesting, the move in Bitcoin. We can kind of talk a little bit about that. I was surprised that it kind of just continued to move higher. We think we did get above this 1 hour VPOC, right? We digested a little bit for about a day, and then we moved higher pretty nicely above that level. So impressive for what's going on right now in Bitcoin, and that takes us out above the April peak. So where could we be headed next in this? Let me see if I can come up with a level here. The top, notice that, and again, I haven't looked at this chart too much in terms of the weekly value area, but 36,505 would be your resistance for the year. All right, so that's quite a bit up further. Again, that's on the weekly chart. We're going to find some other resistance points also around this 39,000. And let's see if we've got another version point of control. Let's wait for Thinkorswim to adjust. But looking back 180 days, it doesn't look like we've got any further up there. So if it wants to run, it can run without any major resistance that I see in my charts, using Bitcoin futures, not spot Bitcoin. All right, so that was your best group this week. Right, and the home builders continue to chug higher. Good earnings, also some strong housing reports. Healthcare was actually up 1.4%, and that's it in terms of areas that were up this week. Consumer discretionary did okay, basically flat, as well as consumer staples. Agriculture, we've talked about how agriculture commodities have been pretty hot. Using the DBA ETF. I don't think that closed above its value area for the week. I think it kind of got rejected there. It did get rejected at 22. So that's the level to watch for the DBA, the agriculture futures ETF. But interesting that it did not make it through there. Transports, industrials, those acted decently this week. They were not down a full percentage point. And then on the right side, you've got some problem areas. Geez, what a week for the Chinese internets. They saw a lot of call activity last week, some momentum to the upside. Well, they gave all that back and more this week, down 8.5%. Also, clean energy, which was showing some outperformance at one point last week, is down 8% this week, really getting crushed, along with those banks, both the regionals and the larger or all banks. One was down 6%, the other one was down 7.5%. The semis really took a breather this week, down 5%. Solar, which is a part of the clean energy, biotech. So again, like some of those higher risk areas really pulled back. And even the robotics ETF, which I think had like 4 weeks of gains, finally after this move, and we'll see if this kind of comes in and may provide a setup in here. But this was down 2.2% today. But, that was a nice clean break of the value area, but pretty nice move, from that break to the highs. And now, looks like digestion mode at this point. REITs, gold miners also rounded that out. Argentina, I know a lot of people have been tweeting about how strong Argentina has been. There's what the chart looks like. Pretty amazing performance for Argentina. Remember the names that are in this. YPF is in it. GGAL, I believe, is in it. MELI is also in this ETF. So very strong even after a flat day today. Besides that, not too many areas that were up internationally. And again, a lot of areas that were down over 3% on the right side over here. Just going back to today's performance and some things, again, a lot of things that were down and got hit pretty hard today. You know, looking at things like the utilities were down 1.5%. Aerospace and defense, clean energy stocks, they were down. There's the robotics that we just mentioned at 2.2%. So overall, right? I mean, I think you're getting kind of the the hint of this video is that, you know, we had a lot of digestion, and that's for now what we call it. But overall, this is quite normal. And I think, you know, I'm not going to go much more into this, you know, into sectors in this video. We'll talk more about that in the member videos over the weekend. But, you know, if you fared okay this week, you know, great job, you know, because every day was had some you know, tricky and whippy markets this week. So, you know, I did okay this week. I finished basically unchanged for the week, just about flat for the week. That's fine. I take that as a small win. Certainly not every trade that I did. In fact, I even took off a couple swing trades that started to move to the downside for me. So, you know, kind of took off some risk today. I did that a little bit. I took off a couple trades yesterday too. But yeah, and then, you know, that's kind of my best defense, is just taking off some exposure and going into next week a bit cleaner, considering that you may have some volatility with quarter end, right? And then we can kind of get going. But, you know, for the new month, but you know, we don't know what kind of trading opportunities will bring next week. But this way, kind of going in with a little bit more of a higher cash balance, you know, will work for me. And because I'm quite pleased with where I am at this point year to date. I've had a good month, and right now I'm sitting up about 24-25% up year to date in my trading account. So I look to kind of hold, you know, into if we get more of the wishy-washy price action like we got this week, you know, sitting up that much towards the end of the month would be, you know, a nice place to be. So look forward to next week's challenges with you, and we'll be prepared with our watch list as normal, and we'll go from there. Guys, have a great weekend, and I'll see you on Monday. For members, you'll hear from me on Sunday.